Ladies and gentlemen, welcome to a new episode of the Fintech Hunting Podcast. We have a fantastic guest for you today. He's an industry thought leader, an automation expert, global sales leader. Please help me welcome to the show Neil Armstrong, Executive Vice President of Strategic Growth at Indicom. Neil, welcome to the show.
What's happening, man? Happy to be here. Thanks for the invite. Excited for the next 15 or 20 minutes or so.
Oh, well, it is great to have you. You and I have known each other in the industry for quite some time. I'm finally glad we got you on the show. Talk to me a little bit. Okay, we're here. We're in the start of 2025. What's kind of the state of the market? What are some of the things you're seeing? What are some of the conversations you're having right now?
That's timely. We actually had our annual kind of outlook for 2025 with the Boston Consulting Group this morning. We utilize their services along with the Stratmore quite often, right?
Okay.
Two of the best. And it's interesting because, what we thought was going to happen was we thought we could see a little dip in rates. We're going to see a little bit of volume increase, prepare for some possible refinance volume in April or May. And that's not what it's calling for. I think we finished the year at 1.7 trillion. We're going to be probably in that 2 trillion range in 2025. So a little bit of uptick, which is positive. But I think that, all of us thinking that there's a little bit of refinance. I think it's already happened in the early fall. We saw a little bit of bump there. Yep. And now we're really working with our clients on what's their current state at, where are they looking at from a cost perspective and what are they trying to get to? What are your goals, and how do we get you there? So it's a little bit of a shift, right? I think, there was a really nice little way when I looked at the end of the year, how profit in the fourth quarter was up. I think it was like $704 per loan versus a loss in the third quarter. Positive, right? So I look at the positive of things, and that's a positive for me.
Good, and I think what I'm hearing you say is people have to start looking at their cost structures, right? Mm-hmm. Lenders can't continue to be operating where they're losing money. Servicers can't continue to be operating where they're not making any money. So how do they recalibrate and how do they really focus on those cost structures? We've hit upon rates, and we don't have a magic wand. I can't tell you rates are going to be this for sure. People have been wrong the last 2, 3, 4, or 5 years. What we can say, though, is even though volume will pick up some, it's going to be a lot of the same things. So the lenders that are prepared, the lenders that have leaned into technology, automation, I think are going to be the ones who are going to win the game. And then when rates do change, scalability. So talk to me a little bit about the push for scalability so we don't have this constant, I think it was Jonathan Kors, the former CEO of ICE, used to always say, we have a huge propensity in the mortgage industry to use human spackle, right? When rates go down, let's throw a bunch of bodies at it. When rates start rising, let's just cut a bunch of people. So how important is scalability and what's your view on that?
It's critical, but I think step back a second and I think the most critical thing, and I've seen in the past probably 12 months us make a shift as an industry, we're getting more educated. What I mean more educated is, you mentioned the human capital piece, right? Rates are dropping, I got to add people. But then we miss out on that window to gain that scale or the loan influx. We weren't properly staffed, right? But then the flip side, rates start to go up and we hang on to the staff too long and it kills our profitability, right? So One of the things I've seen as a big shift and kind of step one with us when we work with a new client is to find out what their cost per loan is broken down by function. That is the key. Having a detailed look at per function, post-closing. What is your trailing docs? What is your shipping and auditing? Do you have any MERS costs? How many people you have decked against government insuring, right? Having that level of detail gets you and affords you the ability to find out now where do I rank against the rest of IMBs, small regional banks, credit unions, right? That to me is the most important step because what if your cost structure in an area is good? Don't mess with it, right? If you look at the Stratmore and they put out the peer group studies, right? And Sue Woodard and Garth Graham does a fantastic job of digging into that data. That data is critical because you can use that to see where do we align, where are we out of scale or scope for where the industry's at, then I can then make those necessary changes. Today on the call with the Boston Consulting Group, one of the things that they really were pleasantly surprised at is how many IMBs and how many banks have leveraged technology and automation, though, already in their ecosystem to when rates do drop, now they can scale seamlessly without adding that human capital element, right? Yep. That is where the profitability really starts to go off the rails, right? Which is great. We've had a couple of clients that, were very critical for us to automate processes by the end of 2024 because they did think April, May comes, we're going to need that scale because of the refinance. I think there's a little bit of window now. I don't think rates are going to see that drop fluctuation. We're not going to have an influx of refinance volume. So lenders now do have a little bit of a more window, 6-7 months, to make those updates in their tech stack. Look at automation to help scale. And then when the profitability starts to change in the better for them, it's because they've made those changes and investments, right? So that's what I'm seeing a lot of right now. But I'll tell you, I'm really excited when I'm getting on calls with new prospects that they do understand where they're at.
Interesting. So that was going to be one of the questions I ask you is how many of those lenders that you're talking to really know those numbers by function? Because what I've seen in the past is they don't have a good enough view at a granular level of where all of those expenses are. Or another example I'd give you is lenders trying to do all types of loan types, and they don't even know which ones are profitable and which ones they're not making any money doing. If you don't know how to do a 203K loan, quit wasting time, resources, and everything in doing those. So if lenders are not prepared, first I'll let you answer the question of how many come prepared. And then the second would be for the ones that are not prepared, how do they get prepared and get those numbers?
Great question. If you had asked me this question 3 years ago, I'd say 5% understood where their cost structure was broken down by function. They might say, oh, my cost is 11,000 alone. And that doesn't help. You've got to know per function where to pull those levers, right? Today, when I've gotten, I would say it's up to probably 20-25%.
That's encouraging.
Yeah, it's very encouraging. And there's been some recent ones that have blown me away with the level of detail that they have per function. So one of the things that and I got our COO, Chris Swamanoff, and I know who you've met, give him a lot of credit with this. One of the things that he's implemented is when we go into a new engagement or even an existing engagement, right? Clients we've been with for 15 years, when they talk about, hey, we need help in X, we sit down with them and we give them an ROI document and says, okay, I want you to fill this out based on your current mapping, right? What does your numbers look at? Because I'm not going to put you in a new solution where you're doing great at. Let's concentrate on these non-customer facing functions where, the return on investment is substantial. The cost benefits are immediate, right? So no, I've been really encouraged about what's happened. And I think maybe it's because the lack of volume, the lack of profitability, it's forced us to finally do it, right? When you got loans coming in like crazy, like, 2021, you're making hands over fist dollars coming in.
Exactly.
Now you're kind of forced to say, okay, if we're gonna survive in this thing and we want to prosper in this thing, where do we look first?
All right, so you've talked about, that cost analysis by function. I think that's critical. Now let's talk about what are some of the other, target non-customer facing functions. What are some of those that lenders really need to look at? Because everyone looks at, well, here's who's dealing with the customer, and this is really important. But what are some of those back office functions that they really have to button down?
I mean, there's three right off the top that I went back and recently looked at our sales reports and clients that we brought on board over the past, probably 21 months roughly. And it's really three buckets. Post-closing is the first thing. It's non-customer facing. I probably have 3 calls a week with lenders saying, I can't stand trailing docs, right? It's like a black hole. It goes away. I don't know where it's at. My cost structure is high in it anyways. That's step one. I mean, look at those back office functions that aren't customer facing. Another thing is low-hanging fruit, as I call it, is we all have to do loan setup. We all have these things that we have to order, right? You order a 4506 or a Halcyon report, right? You're ordering all these functions. Those should be automated. Those should be, I'm not doing nothing. I don't have staff deck against it. There's milestones that are hit when the loan comes into a point of sale, triggers into the LOS, boom, they're automated. Those things are right for the picking. And the third thing, which is a really tricky when I talk about this, is I've brought on a lot of new quality control clients recently. And it's either because they're in trouble or something's happened where they need a vendor that can help them with some expertise. But then you look at how they're auditing in their functions and what they're paying on a per loan basis. There's a substantial benefit to kind of looking around and seeing what's out there, because we're not the only ones that do this, but there are good vendors out there that will automate certain functions of that where there's eliminates a lot of risk because it's 100% accurate. But then you're looking at that bottom line cost. It even affords some, in our cases, where they've now increased their sample size. They've actually done more targeted reviews, right? They're
Yep.
pinpointing things that the agencies are sending back to them saying, hey, income and self-employed, it's a big issue right here, right? Collateral. So there's a good area of opportunity there. And I'd always point to underwriting, but let's be honest, not a lot of people are raising their hand saying, wow, I need 30 new underwriters right now because all the volume coming in.
Right.
But that is another area I'd point to.
Talk to me about technology versus human capital, right? We're looking at cost, we're breaking it down by function, we're doing it by the human capital. How do you then factor in, technology versus the human capital?
We always look at where technology can be implemented first at an easy entry point. And one of the things I was recently surprised about, and I feel like I know the process pretty well, but I got thrown a curveball a couple weeks ago, and that is large independent lender said, hey, listen, you're working with a competitor of ours in automation. You automate their loan setup functions. Couldn't you automate any checklists if it's just, stare and compare and validation? We're like, yes. So we like to do an evaluation. Send us what your process is, get on a call with us, Zoom, walk us through your process, give us that documentation, and we'll put it through an automation test. It's surprising to me how high of automation. I think we came back as 88% should be automated. So instead of a 3.5 hour pre-closed checklist process with 3 checklists, it's down to 35 minutes, right? I would rather do that for a lender than say, oh, send us, let us do the work for you. Because we still have to do it for 3.5 hours as well.
Right.
But then you look at the scale. Now all of a sudden your rates are dropped. You start to go, you're adding server capacity, not people to review the process, right? So there has to be an evaluation process. And I think anything that's checklist validation driven, you should look at automation first, right? We've gone really deep into the QA/QC space, right? Automating pre-purchase reviews for correspondents, automating rescission relief for internet companies, looking at pre-close QA automation for retail lenders, right? You have to look at it in rules based. What type of triggers can we build in that is going to map it to 100% accuracy? We test it. But my biggest thing is raise your hand and just ask, hey, we're doing this process today. It's really labor intensive. It's checklist driven. Can it be automated? Most of the time it's yes, right? So I'd rather have a partner that wants to automate first and then add more bodies later if they need it, right? But at least they get that in their ecosystem now.
As you start doing more and more of these audits, one of the biggest things that people are kind of tentative about is data integrity and the challenges with the different document solutions and all of the data. So talk to me kind of, how do you guys approach that and how do you educate the lender on those areas?
Yeah, we want to know exactly where their kind of loan indexing data extraction capabilities are today. What accuracy are they getting? What challenges have they had? Are they seeing it downstream? Like, for example, we had one client that says, the data's wrong here. It's getting into our servicing thing. And then we're doing forced placed insurance because we don't have the right version of a homeowner's insurance policy, but it's there. It just points to the wrong thing, right? So there's a lot of downstream problems that happen with the lack of data integrity. We have our own proprietary system that's machine learning based. So if it doesn't know a document, it takes a couple of passes and then it learns the document, right? It doesn't matter to us as long as they have an accurate system. That's
okay.
But when it comes to audit specifically, we have our own that we will pull in, triangulate that information, right? Making sure that data is accurate and then perform it from that point on. I think one of the biggest challenges is what if the data is wrong? What if the input in, bad result out, right? So that's probably the step one is looking at where and how your index, is you doing it manually? Fine. Are you doing it with a nice system that's available out there? There's some great systems out there. What level of accuracy are, and we test that to make sure that it is accurate before we start to look at any automation within, whether it be quality control, underwriting, post-closing, anything.
We've got a lot of conferences coming up. Tell me about some of the next couple conferences where people can see Indicom, find out about all this incredible stuff that you guys are doing. What are some of the upcoming conferences you guys will be at?
Man, we're starting to get busy, right? So
that's right.
In a couple of weeks, I'll be at the IMB,
okay.
One of my favorites of the year. I love it. A great venue in Austin. Matt Woolley, who's one of my sales executives, he's going to be leading our efforts at the servicing conference. I'll be there as well. But then it gets kind of crazy. From there, we start going into the ICE conference, which to us is like an all hands on deck.
Absolutely.
Extremely busy conference for us. Then we're looking at the Texas MBA goes in April, New York secondaries in May. I'll be at the gathering in June.
June. Yep.
Mortgage Innovators in May with one of my sales executives, Brett Fish, will be there in Huntington Beach. So then we'd make a big splash at the Western coming up in August. So, and then, fall gets crazy as well. So it's a full slate for us.
It is. And for all of you listening, make sure you take the time to go see Neil, meet with his team. They're doing some incredible things. You had mentioned servicing, and I'll be at servicing. You and I will get together. I look forward to that. Talk to me as we wind down. What are some of the servicing trends that you're seeing?
So man, this one gets me, I get goosebumps. I just got goosebumps just now when you said that, because if I had to point to one bright spot of last year, it's servicers. And it's a bright spot because, even though the delinquencies went up, I think 10 basis points, it was relatively flat. Their profitability has been good. For the first time ever in my career, I've had servicers reach out asking what can be automated in our process. And that to me feels amazing because, there's not a lot of automation that has been done on that side of the business. Even we sit down and we go over their processes and we show them what they're doing today. A lot of them are asking us, can you lift and shift this to your team, make it more profitable, and then you automate it and give it back? Yes. Could you just keep it with less people at that point? Yes. We did one recently where it was 14 people on a process. We took over that process. We got it down to 4 people. Now, if they want to take it back, fine, or they can keep us having to do it of the exception-based work, right? I would say that is a huge thing I've seen. We're about ready to do some automation and servicing QC, which I'm super excited about. But I would say them raising their hands, looking at these standardized processes and loan administration, escrow analysis, right? Low-hanging fruit. We've even looked at default. Even though default's pretty low right now, we've looked at default and seeing what can be automated within the default process, and we were surprised at how much could be. So there's a lot being done on that side. And then, the loan boarding piece, and we got a little bit of data integrity discussion. I would say that is the biggest area of opportunity, making sure that loan boarding process is accurate. You've got the right data that's coming in, you're putting in the correct folders, you're doing attribution on it, you're doing versioning. And that is how you make sure that the customer experience stays good, because the information's accurate. You're not reaching out to a client asking them for things that's already there.
Right.
And you have it. But in your system, it's showing wrong. Now it's a CX issue, which is bad, especially if you're a sub-servicer and there's a CX issue, because now your client's the one that's going to hear about it, right?
Well, and what I'm hearing there, so any of you originators who think that when the next refi boom comes, you're just going to make hay, what I'm hearing and what I'm also seeing is servicers have been investing quite a bit. And they're now getting much better at outreach. They're getting much better, like you said, with the data. They're going to be much stickier than they have been in the past. So when a refi boom comes, they're going to be the first ones out of the gate who have that relationship already with that potential borrower. So originators, you've got to start investing more in technology. You got to start looking at it. It's encouraging to see that happening at servicing. We're both excited about being at the servicing conference. Neil, what else is in store for Indicom as we're winding down? What else are you guys focused on in 2025?
Probably more expansion of what we're doing and going deeper into automation. That's probably the thing. And now we're very excited to make an announcement here in about a week or two. That we've automated FHA underwriting. So that's huge for our, Ginnie customers, especially in the consumer direct side where they got large Ginnie pools. And we're going to add 95 underwriters to do the refinances when it goes down a point. So stuff like that is exciting for us. We're ready to automate pre-close or post-close QC right now. So it's coming out live here in a couple weeks. Really just going deeper into the machine learning, right? Generative AI. And we've been testing it because when you look at appraisals, for example, right? We've automated the appraisal process, and I believe it's Clear Capital has a really good solution around, looking at the comps and the photos. So we've delved into generative AI because we automate the appraisal process except for the comps. Well, we've been testing it, and it's so exciting to see how far it's come and how scary accurate it is. But we will never introduce it into our layer until it's at that 100% level, right? So it still has a way to go. But continuing to push the envelope and what can be automated and help our clients reduce their costs. That is our core function, right? And it's going to be exciting for us. I think we're looking at having a nice little bump from last year, which is great. But A lot of positive energy right now. A lot of positive energy.
Well, you brought up AI and machine learning, and we're going to have to hold that until our next conversation, our next podcast. I can't wait for that one. But Neil, if people want to find out more about Indicom, if they want to schedule time with you or your team at any of these upcoming conferences, what's the best way they can get a hold of you?
And, either look me up on LinkedIn and DM me, or I would say easy email to remember, neil@indicom.net. So reach out to us. We have a great sales staff and an amazing client engagement team. Our client engagement team are all veterans that help our clients with cost structures and implementation strategies. And they're 3 of the 4 of them are actually former clients of ours. So we've been fortunate to have them as clients, and now they're on our team. So really proud of what we bring to the table, and look forward to it.
Well, I look forward to seeing you in a couple of weeks in Dallas at Servicing. Neil, I can't thank you enough for being a guest on this episode of the Fintech Hunting Podcast.
Dan, thank you, buddy. Appreciate it.